Okay, everybody. Sizzle Stocks this week, March 7th. Let's start going through some names here. Bill, yeah, I hear you. Thank you. There we go. SPLK. All right, let's start off with it. Bill dropped one in here. Let's go. SPLK. And we'll talk about the market in the context of all this, but we're going to go through names and see what's going on. I mean, we definitely got a lot going on in the markets right now. Powell testified. I haven't actually seen the results of that. How's the market reacting? Those can take some time. I don't even know if. Looks like they didn't like the idea of him starting. What do we got here? 10, 11? Is it? What was it? 10 o'clock when he started talking, right? Yeah. Anyway, all right. We'll get to market commentary. It's not much he's going to say today to set the long-term trend. The Fed moves in a couple of weeks, makes another rate hike decision. So we'll see how that goes. I'll talk about that in a little bit. Okay. Quick context. With all these names, I am looking at the volume profile. That's, I don't know enough about all these companies. I don't have an idea on their fundamentals, right? I'm looking at them in terms of overall market macro factors, what sector they're in. And then most importantly, this volume profile here. Volume profile, this blue shaded area here, that tells me how the volume has been distributed over whatever price range we're looking at. In this case, it's 1 day, 1 minute. Let's look at the last 30 days, though. Last 30 days, you can see how the volume traded on SPLK between 110.03 and all the way down to 86.45. This red line here is the point of control. That is where most of the trading happened during this time frame, the highest volume price point. And then this line right here, this kind of yellow line, and this line right here, those are the value areas. 80% of the trading volume happened within that, around the point of control. The red, green, and blue lines are my custom indicator called the Opportunity Zone Indicator. And what it does is help me dimensionalize. It's based off the volume profile and helps give me some dimension to what's a realistic price move over the time frame, that sort of thing. Okay, this looks a bearish setup. Let's see what sector is this? SB. Okay, if I can have anything insightful it's an IT company. All right, applications. They write applications. All right, okay. Bill, I'm seeing this is a little rough, so it's not such a clean distribution, right? A little choppy, probably. Maybe it's less traded. This drop, this kind of steep decline in volume here, and then this gap right here tells me there might be a little bit of downside, but a little downside potential. So this is over the last 30 days. Let's see what the 10-day says. 10-day looks more consolidation, right? It's sharp on both sides. It's just kind of a sharp drop off. For you guys that are new, what I try to look for, and when I see one, I'll point it out, is gradually increasing volume to a sharp point. And if it's gradually increasing as the price goes down, that to me is a bearish signal. And if it's gradually increasing as the price goes up and then a sharp drop off, that's a bullish signal. We've got some consolidation. Looks like it might be digesting some news. Well, we had earnings the other day. There's some potential for the downside. What's the long term look like? Yeah, I mean, it's definitely at here's the last 90 days. It's kind of at the extreme range. I don't, you're just going to want to watch how it trades around here. If it does something below, well, I'd watch closer, maybe set an alert for 99.72 right here. And if it trades below, and then see how the shorter term volume profiles are setting up. That's my thoughts there. Here, let me open my notebook so I can take some notes, because this is good stuff. Okay. SPLK. My only bearish, I'd say. Okay, what's all right, if anybody has another ticker, drop it in, but in the absence of that, let's go to Sizzle Stocks. Let's do a screen here, run through them. Before we do that, why don't we talk about the overall market? I am curious too, so let me get this thing. There we go. I'll pin this to the top. There we go. Now I'm working like a pro. All right. So here's the S&P. Ooh, yeah, not liking what Powell's saying. And whatever it is. Warns of faster rate increases. Okay, so have I been saying that? The Fed's going to need to do more. Oh my God. I bet everybody got sick of hearing me say the Fed's going to do more and go further than the markets expect. They have to. They have no choice. But let's see. To me, all right, so this is actually a nice range, right? And so it's going to take a fair amount for the market to get below this 39.30 here. Let's just keep this, and so this right here, there's a lot of buying. This is a bidding, a lot of bidding going on, right? The bidding gets more aggressive as the price goes up, right? So I think the market's going to digest the Fed, and it could trade a little bit down through here, but I think we're probably 4,100 is easily possible over the next few days. I will stand by my statement that the market will not get above, the S&P will not get above 4,200. And this year, definitely not until the Fed starts easing again, and inflation consumes us all in a hyper devaluation scenario. We're going to be, we're not going to see 4,200, but when it goes back, we'll be looking at a crack up boom then. Anyway, I'm getting too far into the future right now. The Fed is aggressive. They're going to beat this market down. But in the meantime, it could easily trade up to 40 in the very near term. It could trade up to 4,100. There's some willing bidders right down here. And they probably are still there. Let's see. That's the 10 day. Let's vary in the 1 day. It's kind of, this has been a very near term building pattern. I don't see anything to take this thing a whole lot lower today. But longer term, I think so is the market, unless the Fed comes out and really starts jawboning a 50 basis point hike, I think we're looking at 50 basis points in 2 weeks. But this whole thing wants to go down. This is all very bearish to me, right? You've got this building volume that it wants to retest, maybe fill out some of this volume here. So there tends to be, especially a large liquid market like the S&P 500, there's kind of this distribution of volume. Think about your histogram, right? That's exactly what we're looking for. The bell curve, normal bell curve. So there's some trading that could happen. So like that 30-day pattern, that bullish pattern that I saw, that could take it again up to this 4150, 4160. So we could trade in this range a little bit, fill this out a little more. But ultimately, then we start heading down here and we'll be into something new again. We could be, but be ready for a rally up to maybe 4,200. Okay. Let's see. Let's keep if you guys don't have anything else, I'm just going to keep going through this. We'll look at it from a macro standpoint. Simply because I haven't. Here, let's look at the NASDAQ. See if it. So now it'd be interesting if the NASDAQ says something similar, right? So again, they had this lower volume, not quite as high up, but it's got this lower volume that it's likely to fill. This is a decent pattern though here, right? I think This tells me, so the NASDAQ isn't going to hold up while the S&P tanks, and vice versa, right? So you need to consider them both together. You've got a little bit of a bid way down here at 107. I mean, that's a long drop. I mean, that was 3,700 on the S&P in terms of, how far the range was. We could drift here for a week or two before we start moving on down. Let's just zoom in on this then. Yep. 1257, right? So we could trade higher, but this whole thing wants to go down longer term, right? That's important qualification. That's an interesting one. Just some near-term volatility right in here. What we've got, I mean, we trade down here to this point of control, but let's see if there's anything. 5. The market could sell off a little bit more, but not much more. That's what I think. I think right in here. So that's the NASDAQ and the S&P together. Let's see. Somebody dropped a ticker in. What do we got? I need to unpin this. All right, Peter, what do we got? Roku. All right, let's take a look at Roku. Yes, let's do it. Let's take a look at Roku. Was it Peter Phillip? Peter. What do you know about Roku? So this is a great opportunity to kind of share a little bit of fundamentals, a little bit of, what your position is. What kind of axe are you grinding? Are you long, short? Do you want to go long? Do you want to go short? Are you looking for a good place to get out? Why are you in the position, or why are you thinking about it? Fundamentally, what do you know about the company? That's relevant. I think a little bit relevant. That would be relevant for everybody here. Okay, Roku. Here's the 10-day. This looks not convincingly bearish, but there's some downside room. So maybe around 56, right? So you have this building volume, a little bit choppy. 56, 56.95 looks possible. I'd be keeping an eye on it. Let's see. Site posted something. Short. You've been short for 2 weeks. I think am I interpreting that correct? So you've been short for 2 weeks, wondering what to do. I'm inferring. I think this thing wants to go down. Look, so there's this gap right up here. All right, so this is a pretty extreme move. I wouldn't be surprised to see it back up a little bit to 66.70. But I see the 61.20 at least. It could go further. Let's keep those numbers in mind as I walk through these. So that's the 5-day. 1 day. This isn't really telling me much. Let's go back to the 10-day. 10-day, 60. Yeah, so 10-day, 56. If you're patient, if they don't expire, if you've got a lot of expiry time, a lot of time to expiration, like over a month, I think it might be worth waiting and seeing how this plays out. Let's just look at the 90-day. Yeah, it wants to get down here to 52. I'd hold on to it. I mean, there's a little bit of choppiness you're going to experience right in here. Maybe up to 70. I don't know that I'd worry about that too much. What you have is, it got to an extreme level, kept trying to retest it on low volume, boom, and see how this volume builds as you go down, right? I tested it and didn't quite make it up to prior highs. So, I think you got some room on this one. I like it. I have room to keep it. That's a good one. Okay, thank you. All right, thank you for that, Peter. All right, if anybody else has got anything, you can drop it in. But in the meantime, we were talking equities. We went through the S&P, the NASDAQ. Why don't we go through the Nikkei? Let's get a well-traded futures contract. I haven't looked at this in a while myself. So this is on the 90-day. This is bearish to me. You have a little bit of trading out here, but this building volume, kind of a sharp drop off. And then, so this is what, 28 down to 27. Yeah, 28 down to 27. A few percentage points. And possibly down to 26. Let's zoom in. So this is 90-day. Let's keep zooming in. Okay, so here, so what we had, so this is very interesting. So over the last 30 days, given the amount of volume, around this range here between 27 and 22, see how nicely bounded that range is? So it kind of, as soon as it tapers off to nothing, right, you're getting what is effectively 1, 2, 3 standard deviations away, right? And it's nice and smooth tapering. Something's definitely got motivated. Something definitely motivated it higher. But it was on very light volume. So I call these are initiating markets. It's looking for a new distribution, looking for a new price, right? Whereas there's I hate the word fair value, but to call it a consensus around this 2750, a lot of trading around this range, but this whole thing wants to go lower, right? But it broke free. It broke free of that. It was like something new came along and shot it up, but there wasn't a whole lot of conviction, right? Because there hasn't been a whole lot of volume participation, and now it's starting to lose steam. I would not short this right here based on this. I would want to see it get below 27,800 or wherever this green line is when it gets down there, right? That's what you have to. These things, this is real time. These numbers evolve with price and volume, right? So the numbers are going to shift as the distribution of volume shifts, trading volume shifts. But anyway, you've got this initiating market. When you see these, you don't know if it's like a falling knife or the opposite of it, right? I don't know what the opposite of you never want to catch a falling knife is. If somebody's got a clever analogy, that's great. But it's a very low volume rally. No conviction is building up yet, and so there could be a room for a new gap, right? So let's look shorter term and see. So that's over the last 30 days. All right, you got a little bit of volume building up here. Let's look at the 5-day. Yeah. Considering that most of this is pretty low volume, but there's nothing that says bullish about this to me. So, if I looked at this 5 and 10-day pattern and I saw a very bearish pattern, right, which would tell me, kind of what you're doing is looking into what the volume looks like in here, right? A closer look. After the last, you're going back, 10 days, 3, 7, roughly back here. And I saw a bearish pattern over the 5 and 10 days. I'd be like, oh yeah, this thing's going to go down there and keep on going. I'd be cautious below 27, and look for it to cross this green line here. And possibly even blue line, and then you get much lower. Let's just see. So we looked at 90-day. I want to look at the 180-day on this. Yeah, there's the same thing. It doesn't like these levels, likes these levels a lot more. Yeah, that's a decent short setting up there. NKD, that's Nikkei. Okay, ooh, that's good. All right, so that is the most of the equities we're going to look at. Let's look at bonds. Let's see what 10-year and 30-year tell us. So, and I'm going to get a drink of water. Sorry about that. Maybe there's a bit of a bottom bidding out here. So look, the 10-year yield curve right now to keep in mind is the 10 years yield curve. So let you take the 10-year yield minus the 2-year yield, right? And that normally that number is supposed to be positive. Well, it's getting down to close to negative 100, about as steep as it's ever been. It's probably around 80 or 90 or something like that. And that's because the Fed is hiking rates, and the markets, are pricing in those very short-term rates. Fed fund rate is overnight money, right? And the higher they keep that short and longer the market thinks that short-term money is going to stay there, the 2-year is much more sensitive to that. It's going to increase more in line with the Fed funds rate. Okay, and then the 10-year rate isn't going to move as much, and it hasn't moved as much because the 2-year is higher than the 10-year because the markets expect rates to come down, so the Fed to back off, and it's really a signal of tightness in the economy. I'm not going to go too much into that, but anyway, the 10-year has come down, but not nearly as much as the front end. The market is kind of this looks like a decent bottom. Let's zoom in though. Let's get some more near term. That's not really telling me much. What I am noticing here is I'm seeing a little bit more bias in the market. It's been 2 months since I've seen anything real in the market, especially in treasuries. But here we go. This it still wants it. The impulse is down, build, and maybe down here it could go at 110.13 or something. Yeah, nothing real here. So there's a little bearish bias to it, but that's not so surprising. The market is digesting a more aggressive Fed, the likelihood of a more aggressive the 10-year. So this is the 30-year. There's a big gap. That's a huge. Not to say that it's going to get down to 117, 118, but that's a big move in 30-year treasuries. Woo! Excuse me there. Oh my gosh. I remember I'm on tape. Apologize for that. Anyway, okay, so treasuries are not looking constructive. What they're doing is pricing in a more aggressive Fed and higher inflation, because inflation drives long-term rates up too, right? Inflation expectations. It's a big part of it. All right, let's do something fun. Let's look at gold. I want to buy gold. But with a more aggressive Fed, tighter financial conditions, if they ever start to tighten, it's all a bet on how effective the Fed is going to be to beat it. Are you long-term or short-term? I want to own gold for the long-term, but right now we're thinking short-term. I'm not seeing a great deal of bias here on the 90-day. Let's look at gold futures on the 30-day. You've got an implied gap here, but you want to see how this volume builds around this area. I'm afraid I don't. It's just grinding lower. I'm afraid I don't see a whole lot of clarity there on gold. If you take into account, look here, we're just going to quickly go through. Look at how the dollar's reacting. Woo, boy, we're back to it on that. Let's just look at the pound and the euro and the yen. Pound, this looks lower, although it's pricing in a lot of it, but lower with stronger dollar. Euro, kind of a gap. I wouldn't be surprised. I think we're heading back down to par on the euro and below. And this, maybe this is relevant. So this is all of these are weaker foreign currencies. Are showing weaker foreign currencies relative to the dollar, which explains this dollar strength, which explains why gold is going down. And I think that's going to continue. So I'd say generally, basically fundamentally macro, whatever, gold is going to go down, and it's nothing in the volume profile argues against that. All right, we got time. So I got 5 more minutes. Again, if you guys have some names you want to cover, drop them in the chat. But I'm kind of enjoying going through some of these this macro picture a little bit, starting to see something. It's worthwhile. So that tells me something's shaping up. Crude oil. Where are we? 78 on the upper. Yeah, nothing has been as muddled as crude. Well, so this isn't too surprising, right? We've been very range bound between low 80s to low 70s, for a long time. Let's look at the 90-day. Let's look at 180-day because it's been doing that for a long time. So 180-day early, like 6 months ago, we were up here in the $100 range. So, but we spent most of our time down here between 89 and 73. Let's go 90 days. That's going to give us a better look at that range. All right. So it traded a little bit up here in the 90s, 3 months over the last 3 months. But this 80 to 70 range is where most of the trading is taking place. Let's just jump into 9 to 10-day here. It's been, man, I think you really could have been killing it last few months if you bought at below 75 and you sold above 78, or you reversed your position and went short. I think we're headed back down. So recession. So this is what the market is pricing in, and you're seeing some, I believe, oil inventories, natural gas inventories are super high, right, as a result of a very, very mild winter, and the markets are kind of pricing in recession now. So that's going to be hard for crude oil to rally in, unless there's some other fundamental factor. But and certainly China is lending a bid, though I guess they're having to dial down their long-term growth rates. But anyway, I think this looks slower. Pretty safe run down to 75 or 76. I like the way that looks. Crude oil. All right. 5-day. And this, kind of not, this isn't a table pounder volume profile pattern, but this all kind of points lower. At least a few bucks, right? So several percentage point in the very near term. So that's crude oil. Okay, that looks good. Now, natural gas. That's going to be interesting. Just, man, it is down at 263. All right, give me a second here. Okay. Natural gas. It's kind of choppy, no real bias. You got a little 240. Blah, blah. Let's say, is there a trade here? I think we could be headed back down to $2. Oh yeah, it's a build, right, and then a sharp drop off, right? See this? This is a much more normal, smooth building pattern. So the selling is getting more aggressive. Well, so there's two sides to every single trade, right? There's as many buys as there are sells inside of this, right? It's just that the volume is picking up as the price goes down, right? So, and it's kind of definitely pointing, 220, possibly lower. So natural gas looks bearish. Yeah. Okay. All right. Well, that is it, guys. Let's see. Okay. Well, did somebody, not quite sure. Let's see. What do we got here? Touch on the Russell. Oh, yeah, we'll look at IWM. All right. Let's do it. Let's look at it. So this is an ETF. This is telling me bearish too. This is telling me bearish. So far we've had the S&P, the NASDAQ, and the Russell all look bearish, right? Yeah, I like this. I like this a lot. So this is 30-day. Let's see with shorter term. There's kind of a bid around 185. So sorry about it. And I don't know why my voice got so high pitched. So, this suggests that 184 or so is possible, 182, maybe 180. Let's look at 90-day. Yeah. I mean, there's no over the last. There's nothing. This is just a bunch of trading in here. It's just as happy to be at 184 as it is at 180, basically. So 180 looks possible on IWM. Yep. 180, and that would be the extreme end of this range. Oh, I like the way this is setting up. Manny, thank you. I had some good ones here. This is why we do this. Let's see. What did you say there? Yeah. It's a good one. What is 10? Yeah, it might have a little trouble getting through 186 here. But no, I like this. I like I'm not on the 90-day, but based on the 30-day. Call it 180. Okay. Great. Nice. Thanks for that, Manny. That's a good one. And I appreciate you guys all being here. This is very helpful for me. I enjoy going through these. I hope you guys get a lot out of it. We're going to do it. We'll try to do these every Tuesday at 11 o'clock. I think you got some good things to look at. I know I am going to look pretty hard at them. A couple trades in there that show some potential. And we will catch you all later. All right. So Manny's looking at the April 21st 180 put on IWM. All right. I'm going to check that one out too. Okay, guys. All right. That's it for today. We'll catch you later.